Hey everyone, welcome to the video on Bitcoin I'll be doing this morning. It is February 4th, 2020. We finally have a little bit of action here that we can talk about, and so I'd like to discuss, some of the things that have happened over the last few hours, and answering the question, are we pulling back to gear for more upside, or are we done? Are we moving down more from here? So of course, before I get started, this isn't financial advice. I'm not your financial advisor. I'm giving my opinion on the market, and you're responsible for your own trades, managing your own risk, and doing your own research. Okay, let's go ahead and dive into the charts. So over the last, as you can see here, for about a week now, we've been kind of trading inside of this range. I covered this on the video yesterday, so I'm not going to get into it too much, but we tapped into liquidity on the bottom, tapped into liquidity on the top, but we stayed within this range. And again, I defined this range by the top here, and then also by the bottom here. And that really defined the range for the duration of it. So, we went down, we went right back in. We went up, we came right back in. And you can see with the volume profile, all of the volume was right here, almost exactly at the median. So right there at 93.40 or so, 93.41 is for the volume profile. It has its point of control. And, when we traded, kind of consolidated above it, we spiked up. When we started to, come down, we tapped into the bottom, and then we had major consolidation down here below the point of control. And this was more consolidation than we had seen in the past, at least below the point of control. So you could say, okay, well, we had consolidation below here, but we immediately went back up. We came down and consolidated below it again, and then we went back up. We were consolidating above it before we had our big move up. But then over here, we had lots of consolidation that we were seeing below the point of control. And that was after this massive candle here. This is not what I would consider a blow off top. There's not enough volume for that to be a blow off top. But nonetheless, it does look like we are getting a bit of a rejection here. Tentatively, I'm calling this the top for now. I do think that we will probably come back down a little bit more than what we currently have, and it's hard to predict when things are going to top out, when things are going to bottom out until they already have. I mean, look at Tesla. Tesla's a great example. But anyway, what I'm paying attention to here is the bottom of this range. Now that we are opening and closing hourly candles below this range, my bias is continue to be bearish. I do think that we are going to have some consolidation at a minimum. Possibly we're going to get a bounce here, but let's talk about what needs to happen for a bounce. Let me remove the volume profile here for just a moment and take a look at a few things. Of course, we've got our moving averages on the hourly sitting right here at the bottom of this channel, which is at 92.25, 92.2650. We're currently trading almost $100 below that. When we did move down into this territory, we had an attempt, and let me move down to, say, a 15-minute time frame. It's probably going to be easier to illustrate this. When we moved down and we closed below this, when we closed below this for the first time, we had a rejection here, and then we attempted to get back into this range again, and we had another rejection. So we are currently rejecting this bottom, this lower of our channel, which we had been watching for weeks, or sorry, not weeks, about a week. We had been monitoring this, and we had basically a nice, supportive rejection, and then we had a bearish rejection here as well. So a bullish rejection and a bearish rejection off of this. So really, the new range that I'm paying attention to here to really determine what is going to happen next, and just keep in mind that I am bearish for the time being, but I'm going to pay attention to this range right here. If we get a rejection, and this happens to be right at the 21 exponential on the 15-minute, not that that's as important as higher time frames, but right here 91.60. If we can close above 91.60, and just kind of taking that into consideration with these candles back here, if we can move back up above 91.60, and I think we probably will, then I would say that there is a good chance of testing this lower again, potentially coming all the way back up here to back into this range. Now, if that happens, Okay, so if that happens, let me move back to an hourly, which is what I like to pay attention to. So first off, we've got this hourly open and close right here that we have to contend with. I do expect this to be some resistance. But our 3-hour and our hourly stochastics down here, these are all, attempting to cross bullish. So the 12-hour still has room to go, excuse me, but the 3-hour and the hourly, these are all positioned for a move to the upside. So even though I'm bearish, if we can overtake 91.60, chances are pretty good we're going to be moving back up. And let's just see where the last time we had the hourly and the 3-hour all the way over here in oversold conditions. And it just happens to be right here. Now, a couple things are different compared to how it looked back then. The 12-hour was down here as well, which thrusted us up into, this range. So that was back when we were at 8,300. Again, I'll talk about 8,300 because that's when I was, talking about making buys in this green box. I've left it here to remind me that I was talking about buying back here at 8,300. But nonetheless, we had three things that were going for us back then. We had the hourly, we had the 3-hour, and we had the 12-hour that was approaching this zone. So right now we have the hourly and the 3-hour down here. We don't have the 12-hour down here, so likely any upward movement won't be as strong as it was back here. But nonetheless, things do look like potentially we're going to have another move down, maybe down here into 8,900, 9,000. It wouldn't surprise me one bit for us to come back down and try and catch the stops at 9,000. Wouldn't surprise me one bit if that were to happen. But nonetheless, I do think that we are positioning ourselves for another move to the upside, but I do recognize that we can get more move to the downside potentially. Some of the things that are gonna hinder that are the amount of orders in the order book that have just been layering themselves down here in this range, trying to catch the bottom. So there is also the possibility that we won't go down here at all because there are too many people basically trying to buy the dip, and the distribution isn't favorable to distribute down here. It's more favorable to distribute up here in this distribution zone. If we get up here into this red box, which I have had outlined again for a long time, and let me move to a daily time frame to illustrate this and get rid of some of this indicator garbage. All right, so we have been paying attention to this red box. If we do happen to tap into this zone, maybe get into this expanded upper that we've got up here at maybe 10,000, then I do expect a much larger retrace from here. Still tentatively calling this the top for now. I do think that we will have, maybe some consolidation. If this kind of sits here for hours and hours and hours and hours and hours, then I do think that it is possible that we do start a more dominant pivot, as I've outlined here, to potentially come all the way back down here to maybe 8,200. I'm not going to say that we're going to come down here as far as 7,100. I'm just kind of freehanding that. Of course, that hasn't happened yet. Can't predict the future, but I do think that it is possible for us to move down if we don't get back into that range. And again, when I say that range, I'm talking about our major range that we have been keeping an eye on. So I do think as far as our stochastics go, I do think that we are bound for a pivot to the upside. I think that is probably going to happen. I'm still bearish. At least at these levels, I'm bearish. I think that even coming back into this range, I'm still going to maintain a bearish bias. But nonetheless, I think it is very possible that we do make a move back into this range. See what happens here at the 4-hour 21 exponential, which is there at 92.92. The 3-hour, which tends to be a little more important, sitting there at 92.94. So there should be lots of resistance here at this range, and the longer that this takes to consolidate down here, the closer that these moving averages are going to be getting to the price action. So let's wait and see what happens. If the 21 and the 55 do a bearish cross, that would be right now sitting there at 92.35 for the 55 exponential, where the 21 exponential is at 92.95. If these do a bearish cross, then we're going to kind of be looking to see what happened back here when we basically moved from 86.50 down to 8,300 and potentially down to 82.25 or so. So keeping an eye on these moving averages, keeping an eye on this new range, and seeing if we can move ourselves back up into the lower part of this range, and watching what happens at the 21 exponential on a retest of it, because it will retest at some point. It's just a matter of when. We have tested that over and over and over on the 3 hour, and it's going to happen again. It's just the question of how long is it going to take for us to get there, and what are these stochastics going to look like. Right now, the 3 hour still shows potential downward pressure. We don't have any bullish crosses on the 3 hour stochastics at the moment, but we'll kind of update you on the Discord when that happens, if that happens. And speaking of, if you enjoy any of these videos that I do for you guys, like, subscribe, share, and if you do want access to our free to use Discord, just throw in a comment in the YouTube chat, and I'll be more than happy to get an invite code out for you. And wherever you are in the world, I hope you're having a good day, a good night, and a good evening.